Hello there, welcome everyone once again to another video. As I have introduced in the Telegram channel that I'll be uploading a price action review video on Euro USD, right? So it's going to be really interesting, really helpful and insightful as well for all of those who are trying to understand the market. I know it's difficult to give it time, it's difficult to pay the attention, but it's life, man. You have to go through it. You have to make sure that you give in time and give in effort until and unless you feel comfortable, confident in the charts and within yourself firstly to execute a trade. So let's begin. First of all, those who are trading CRT, those who are trading quarterly theory, those who are trading any particular strategy which you use, support and resistance or RSI, blah blah, you need to have this indicator on your chart, which is the NWOG and NDOG, meaning the new day opening gap and new week opening gap by Kryptonite, right? So what it highlights is the new days opening gaps and new week opening gaps. What do we use these two for? The new day opening gap and the new week opening gap as our draw on liquidity or our points of interests or zones from where price will or might reverse or it will consolidate on that particular level. Three things: it acts as a draw on liquidity, it acts as a point of interest for price to find support or resistance, or price will consolidate at that price at that level depending on the price action priorly, right? So you need to keep it here because in the coming videos as well as in my this Telegram channel, I'm going to introduce a few models which you can use just by using you can trade the models just by using new week opening gaps and new days opening gaps. All right. As of now, I do not require it. So yesterday in my Telegram group, I have shared a trade, right? And guys, if you're not there, the link is in the description, and description, I always like make a mess. Follow the channel. A lot of things are coming up in this year, a lot of things. I swear, if I am going to achieve my goals, you all will achieve your goals with me, right? And I have shared this trade. The moment I entered that trade, I shared it, so which means it was live and it was uncharted territory for me. I did not know what the price will do, but I still shared it because of the transparency which I want to keep with my community. Now, it was on a 1 minute time frame. It was a really short scalp, actually, like very smooth sailing kind of a price action. And like I have mentioned in my recent short video, your exits in the market is much more important than your entries. Engrave this in your head that your exits are much more important than your exits. You enter a trade, suppose you enter your trades right there, right? This is what I entered. Where was I targeting? Around, I guess, where was this was the SMT, I guess, right there. And not really, I closed it here, around here somewhere, and then the moment I closed it here, price just started to rebalance all these things, all this price action right here, right? So once I know that my profits are being booked over here, I'll explain the trade, why I took the trade later on, but once I knew my profits are being booked over here, I didn't want to give it back to the market. I just didn't want to, because this is what I have been listening from a lot of people on YouTube and everywhere, and this is what I was following for a very long time, that no, if you took your trade, either it's stop loss or take profit. If it's it should be either stop loss or it should be either take profit. It's not the case. It's subjective. Your stop loss is subjective and your take profit is subjective. What do I mean by subjective? You choose your own stop losses and your take profits. You choose it. No one else can. right? I'll just give the trade idea. Yeah, this is where I'm entering. But where you want to get out, some of you would have like held the trade and then trade reversed and you were like, oh my god, it's reversing, what do I do? And then close the trade here. Possibly, it's a possibility here. And then it was a bloody break-even trade. But what happened after this? You can see the results, right? It's still down. It's still like just moving down and down. Price is right here. Very low probability price action, but still we are canvassing our way through it. So lesson number 1 of this video, your exits are much more important than your entries, right? Remember this. Lesson number 2, which I have again shared in my Telegram group. I don't know why you're still not subscribing or following on that channel. Lesson number 2 is right here. Where's this thing? Yeah. Shit. Yeah. Oh my god. What the hell? Your turtle soup on one pair is a failure swing on another pair. Guys, this is something you should lose your sleep on. ICT taught this, Romeo have been teaching about this, Trader Die, Sham, everyone, TSR, everyone, every single guy out there, they've been trying to tell us this. It was in plain sight. It's just we did not had the comprehension, had the understanding of understanding this one concept right here. This is the, I would say this is the holy grail or whatever you want to call it. This is it. This is the way of looking at the charts. This is the way of hunting your own trades, right? Turtle soup on one pair is a failure swing on another pair, or a failure swing on one pair is turtle soup on another pair, vice versa, right? Which one will you trade? Which one? All dependent on you. You want to trade the turtle soup or you want to trade the failure swing? Why? What causes this? The cause, this is the effect. Every effect needs a cause, right? The cause of this, I'm going scientific over here. What do you think can be the cause? That's it. That's the simplest answer you would need to all the questions. Cause, this is the effect. Now, this is not the only thing which causes price to reverse or anything, but this is one of the most important things, right? If you understand this, let me put you through a visual guide and then I'll take you to the charts, right? Right there. This is one key level. This is another key level. Now, this can be EU. This can be GU. It should be GU. It's not, it can be. If you're looking at Euro USD, you need to open up GBP USD as well, because you cannot read price with just one pair. It's, I don't know why people just preach all you need is one pair, one model, one idea, one strategy, this and that. All of this. Me personally, being a student of price, it's all, I don't even want to use the word actually, it's useless. You need to look at multiple charts, because one chart feeds off of another chart. You guys understand? One particular asset is going to feed off from another asset. For example, Euro, GBP, USD is going to take feeds from Euro USD. Forex is going to take feeds from the interest rate trades. Interest rate will take feeds from the DXY's price movement. And then it all goes on and on. So if you're looking at these two charts, what did I say? A turtle soup turtle soup on one pair is a failure swing on another pair. See, this right here is the turtle soup, any particular level. Now these two things should occur at the same time, this thing and this part right here. Okay, just wanna okay, this one is SMT, right? But this level right here, you're seeing this one, this level and this level should be aligned together, right? So price comes down, takes out this level, but on GBP USD price does not break. So it means what? It's showing strength, which means it wants to go higher, right? Just understand this. This is it. This is all you need. And then the true opens, and then the premium and discount, time frame alignment, every single thing comes up later on. Once you understand this concept, you can apply it on anything. Now going back to the 1 hour time frame. All right, let's just delete all this crap. Now if I'll take out GBP, what do we have right here? Sorry guys, right there. Can you see this one candle right here? All the way down on GBP USD. GBP is so weak actually. Look, it's just creeping me out actually, where and what it's doing. But if you see this price leg, right, which had a lot of volume, and then if you see the price action later on, Euro has been pumping up again and again and again right at the news FOMC minutes, while GBP failed to do so. Now it will be really advanced if I'll bring up the DXY chart, and there is a reason why I'm using capital.com's chart. I cannot say all these things in one video, but there is something which I'm not telling you over here, which I want to keep for later on, later videos. If you see this one, price traveled up right at the highs, while here price failed to do so. Same thing which we mentioned in the concepts which I just taught you. One chart's turtle soup right there. Let me go to the 15-minute. One chart turtle souped, right? Another chart, same time, caused a failure swing. It's a very, very distant failure swing actually. You can see. If I'll delete this and delete these, we can see 6 a.m. in the morning. Now there are a lot of things in this. If you're paying attention, everything is right there. It's just you don't want to think. You don't want to think. That's the problem. If you'll think, you'll see the problem and you'll address it, and then you'll find the solution for it. The idea which I taught you, one turtle soup is another pair's failure swing, and the failure swing is weaker. That's why it delivered lower. while this could not deliver lower. You can see right here. Same thing which happened here is happening right now on a 4-hour time frame. Going into it, guys. We're going into it slowly and gradually. Let me delete this line and let me delete all this crap. Right. Same candle, same time, right? And imagine that's a 9 a.m. candle. What could be the odds? I swear to God, this is crazy. I did not even notice that this is a 9 a.m. candle. Right. It must be random, right? Think, lose sleep over it. Turtle soup, failure swing. At the highs as well. 4-hour time frame. It's everywhere, and this is what I shared in the group as well. Turtle soup. Here, the GBP made a turtle soup. Right there, EU made a failure swing. It's all there. So now, once price moved higher into that level, turtle souping it, right? Now you'd be thinking, why didn't I take the 5-minute time frame entry? Why did I just had to go on a 1-minute time frame and then take the entry? You know, all that how do I say, parroting of anything which anyone else says, and then without actually using your own head. That's what you will start to say, right? I didn't care whether I had a 5-minute confirmation or anything at all. Why? Because we had a high time frame confirmation already. If we have a 1-hour time frame or a 15-minute time frame confirmation, and then such a wide difference between turtle soup and the failure swing, I could have taken the price like entry here, but I got into the market late, and then once this candle closed below the body, my entry was right there somewhere here. It's in the group, you can check. It's in the channel Telegram. Yeah, so delivered all the way down, closed here, and then just waited for price to do its thing. And today I made some small amount of profits, right? Everything was shared with the group, nothing was hidden. If my break-even trades, my losses and everything, I took a trade here. My target was around here somewhere. And it went on, and then it hit it. But I traded the futures on Tradeaway. I don't know why it's not signed in, because it's signed in my mobile. I am outside of my house, so usually I share it from my mobile phone. Now to the analysis. Did I find any CRT here? Yes or no? Look for yourself. You look for yourself, because right there is your CRT, right there. If it's a 1-hour CRT, why can't I take a 1-minute time frame entry? Why? I can. Targeting, I don't want to target the 50%. I don't want to target the full range. I don't want to wait all the way till it takes me out once again and again, like one time here and then wait for it to again, because it's low probability. Why is it truly low probability? Because it's the beginning of the year. From the CPI next week, we might see some good amount of direction for the month. CPI, remember my words, CPI is the direction. NFP leads to manipulation. Know this, and that came from a lot of studies and a lot of attention. Okay, right there. Now it's in a tight range, like really tight range. Over here was my entry, 1-minute time frame. You can check, targeting the recent liquidity pool right there on a 1-minute time frame. Yeah, one more thing. If you take a trade on a 1-minute time frame, 1 minute time frame trade, you're not supposed to target 4-hour time frames, or you're not supposed to target 1-hour time frame targets. No, 1 minute time frame, 1 minute target. Simple. The higher the time frame, the higher it takes, the longer it takes for price to deliver, right? And that was it for the video, sorry, for the analysis. All right, let's look at the price now on a 4-hour time frame. We're still in this range for this week. Okay, let me just put it like this. Yep. So we are in the discount of this range right here, but on GBP, let me just open up another GBP USD. If I'll go on a 4-hour time frame, we are way off from this 30th of December. Wait a minute. Okay. Yeah. On GBP, you can see price is actually closing below the range of the previous week right there. But on EU, it's failing to do so, right? We have SMT here, we have SMT here, which makes it really low probability. You don't want to see such price action. Why are you seeing such price action? Beginning of the year, first month, first week. That's why. You do not want to take position trades in such a price action. Why? You can take, of course, if you want to. You could have taken a position trade right there, right, targeting the Monday's low. But right after such expansion, initially, when you know there is a big news coming up tomorrow, right, NFP, you should avoid this day right here, or such price action. How do you anticipate such price action? When you see one chart, okay, on a 1-hour time frame, always remember, when you see price dropping all the way down like this, when it's reaching up higher, no key level, but still it dropped. Why? Because of SMT. SMT does not require a key level to reverse. Understand? Because key levels are confirmed by the SMT. SMT is the thing which validates the key level, and then it reversed. If the profile it expands and then reverses, which is the profile which can follow? Either it can consolidate and then retrace again, or expand. There is or if there is a key level, it can reverse back up again, or retrace to the 50%. But right now we're seeing the consolidation over here. Why? Because if we have news coming up, so the market is being primed to how do I say, expand in any particular direction. Why? Because such price action breeds what? This is very low probability, so this breeds higher probability or setups and price action coming up. It will release itself soon. So it's like just breathing in between, taking a break from all the exhaustion of the market, like the money being thrown in, money being taken out. Money was thrown in here, right? This candle, right? People bought, sold to buy. People bought here, sold again, right there, and it's exhausted now. There is no money. No one wants to, the algorithm doesn't want to how do I say, deliver the price until and unless we see something like this coming up, right? So on a daily time frame, if you see, this was the yearly price action. This was, you can see the first quarter of the whole year price consolidated, second quarter manipulation below these lows, right? This was the low, manipulated below, expanded higher up until the quarter 3 of the second quarter, right? During May, June, and then it reversed in the fourth quarter right there. And then in the third quarter, it went back up, reversed the beginning of fourth quarter. Now, if you look at this price action right here, right, you would see high, manipulation, right, high, and then reversal, right? On the high time frame, it's the same thing which happened. Like on the higher time frame, the whole this thing, like this one as well, high, manipulation, distribution, and reversed from this fourth quarter right here. You see, right? Exactly at this point, the 1st of October, you can see the beginning of the fourth quarter, and then price plummeted. It didn't even give a chance for anyone else to get back up, get back inside the market, apart from those who sold here, right? And this was also caused by SMT. So I'll go on a daily time frame on GBP. There was SMT right there and SMT right there. There was, if you'll go and verify yourself, you will find it. Same thing. Right now we're here, and it's gonna take a very long time for price to reach here, okay? But once it reaches here, and it will soon, then it's just you gotta be a buyer from here, big time, right there. This is like for the long-term investors I'm giving, those who stayed in the video for a very long time. This zone right here is the zone where long-term investors will be buying. So tomorrow, right, if you see something, same shit, same thing. If you see, this is EU and this is GU. Tomorrow, if you see price taking, doing something like this, suppose this is, these two lows are Thursday's low, right? And tomorrow, if you see price dipping below Thursday's low in euro, right, but in GBP it does not dip, right there. This is Thursday, okay, and this is Thursday here. This is Friday. If it does not dip below, let me show you on the charts. When does the Friday starts here? Right. Okay. This will be the price action. If price starts to consolidate, okay, and then it manipulates lower in EU during news, okay, drops and then booms up. But in GU, okay, if it does the opposite, if this happens, you should be a buyer at a particular time, right? At news, if you see this happening, right, meaning it came here, this is EU, EU took out today's low, while this is GU, it didn't take out today's low. You want to be a buyer for a very short term, short period of time. Be a buyer, take the money out, and then secure profits. Or else I'll just tell you to stay away from the markets. If I see this, I'll take it on a 1 hour time frame only, 1 hour time frame, and then this should happen on a 1 hour time frame, and then on a 15-minute time frame as well, right? Two stages, 1 hour time frame and 15-minute time frame. So yeah, this was it. I cannot give out much more sauce than this, because it's going to be an injustice to everyone who will pay up. Yeah, so this is it. This is what I wanted to show you all in this video. Or it can do the opposite. EU will not take the low, while GU will keep continuing going lower, right? Let's see tomorrow. Until then, good night and good luck, good trading.